Hey everyone, welcome to another video on the channel. Today we're going to be taking a look at StoneCo Limited, also known by the ticker symbol STNE. So Stone released its earnings this past week, which we'll get into, and needless to say, the market did not react favorably to these earnings. The earnings did miss, although it wasn't entirely bad, which we'll get into. But before we get into the earnings themselves, let's take a look at the chart. So we could see that, Stone had hit kind of a bottom in the earlier part of the summer and had found some support around the $7 range. And we had been making these positive movements. It looks like we were getting higher highs and higher lows, and that we might just piggyback up even higher. But then we got to this $12 resistance level, which has been resistance in the past. And on Friday, the stock just puked. I mean, the whole market was down. Stone was down over 22%. That's a huge move down. And it makes sense given the fact that, A, the whole market was down, and Stone is particularly volatile, so it should stand to reason that they would have an even bigger move than the market. And also, these earnings were not really ideal. So let's just get into it. So as we see, Stone came out with quarterly earnings of 5 cents per share. That was a huge miss. So the consensus was 11 cents per share. So that's a surprise to the downside of 54.55%. That's a big miss. There's no way around it, especially when you compare it to earnings of 32 cents per share a year ago. So they only came out with 5 cents. They were expecting 11 cents, and a year ago they had 32 cents per share. So not really great earnings in that sense. I mean, it's not entirely negative, as we'll get into in a second, because there's a few different things to think about with this company. Some of which is within the company's control, some of it outside. But let's look at another factor. So Motley Fool is talking about the same thing, the fact that earnings were only 5 cents as opposed to 11 cents. I mean, if you're looking for a silver lining, the revenue was about 442 million, or 5% higher than the guidance, and up from 275% from a year ago. So that's great. It shows that they are generating a ton of revenue. People are using their services and whatnot, and the company is growing. Although, I mean, 5% isn't necessarily anything to write home about, but it shows growth, especially considering their earnings numbers. That's a positive sign. Also, and the markets reacted a bit negatively, I think, to this as well. They announced that their chief financial officer, Marcelo Baldin, is leaving the company, which not really good news. That this person, Marcelo, was with the company for the past 5 years, and the company's had several people that have been leaving in the past months, which is telling Wall Street that there's there's a lack of consistency. They want they want a team that's in there, that's going to be there, that's going to know all the ins and outs and really understand the company and be able to grow it, not just have people come in for a few years, leave, come back, or do whatnot. So that, I think, was also feeding into the downward movement of the price. So it is unfortunate. So as this is saying, right, they did move over 22%. And one of the things that's impacting Stone now, and this is worth mentioning, is that Brazil's interest rates have surged by 11.75% since March of 2021. This is a fintech company. This is a company that these interest rates are critical to StoneCo's business and their business model. And these rising rates, they're not going to help StoneCo. They're going to be a negative. I know we're often so focused on just whatever the Fed is doing and the Fed's rising rates, but I mean, if you're mad at Jerome Powell for raising rates, man, Brazil's had it even more so, and it's coming across in the in the guidance and the performance of a company like StoneCo. And what I find interesting is, the company knows that investors are getting a little impatient with them, and what they're saying now is they're going to increase prices. They've been increasing prices. That's how their revenue has gone up, even though their EPS has gone down, because they've been increasing the actual prices, and as they're saying, they're going to keep increasing prices at a faster pace to try to increase profitability, which, we're going to have to see how this works out. On the one hand, great, if they increase prices and they can increase their profitability, that'll be great for the shareholders. On the other hand, we don't want them to increase their prices too much to actually deter some business. But I'm not saying that that will happen. We have to wait and see. Again, not a financial advisor. Make your own decisions, do your own research. But it's a bit of a mixed bag here, because we do like their revenues increasing, but we do want to see their EPS beat again. And let's also take a look at what some of the Wall Street is saying, what some of the analysts are saying. So as we see, they're not saying a lot of positive stuff at the moment. So Wells Fargo cut their price target. It was only $11. They cut it to $10. Not like a giant decrease, but still, it shows their expectations are diminishing, at least for the short term. And it's not just Wells Fargo. You can see here, Susquehanna lowered their price target from $28 to $20 in July. And a bunch of other analysts have maintained a hold rating with a price target, right, of $17 at market beat over here. And let's also take a look at some of the institutional holders and what they're doing. I always find that worthwhile to look at because it's one thing to hear what a bunch of retail traders on YouTube are doing, but it's another thing to hear what a bunch of big money, smart money Wall Street guys are doing with their money and how they're positioning, or if they're positioning in these companies. So we can see here that Sumitomo Mitsui Trust Holdings has actually been raising their holdings during the second quarter. Nikko Asset Management also increased their position in the second quarter, but again, look at these amounts, 2.3%. They raised it by 2 points, so it looks like they're just kind of cost averaging into the stock. They're not taking, much more giant shares, although they do own substantial shares, hundreds of thousands of shares. Meanwhile, FMR LLC boosted their holdings by 75.9%, much bigger increase. And Cora Management is also growing their shares by over 329%. So, I think this is good. I think this is what it's telling me is that, these institutional holders haven't necessarily given up on Stone, but they have some work to do. They have to make themselves more profitable. They also have to have a consistent team in there to give some reassurance to Wall Street and to the shareholders that, hey, we have this team in place, our business model is sound, we're just going to keep on increasing revenues, we're going to keep on increasing our profitability. And so I think this is an interesting time for Stone. It would be an interesting entry point. It's an interesting to see where it goes, because they do have a great business model, and they were tearing it up over the past year. And so this begs the question, can they kind of put themselves back on solid footing? Is this just a temporary stumble? Let's see. We'll have to see. That next quarter, people are going to be looking for that EPS beat. People are going to be saying, oh my God, you missed on EPS by over 55%. What are you going to do? How are you going to turn that around? And I think based on their business, they can turn it around. But let me know what you think. Are you holding your STNE shares? Are you going to buy more? Are you selling off? Let me know what you think in the comments, and I'll catch you in the next one.